Welcome back to Closing Conversation, the show for founders, leaders, and sellers who win together. I'm your host, Max Notice. Today's guest is Joshua Lindsey. Josh is the founder and CEO of American Business Brokers and PHX Private Equity. He's taken a company public, bought and sold his own businesses, represented hundreds of small business owners, and built a model where brokerage and private equity feed each other. We talk about what actually goes into selling a small business, why most owners need a specialist in their corner, how to qualify real buyers, and why packaging a deal the right way can make or break the transaction. But the conversation also goes somewhere bigger. Josh talks about freedom, family, knowing what's enough, and why some of the best advice he ever got from very successful people had nothing to do with money. This one is practical, honest, and a good reminder of what the work is supposed to buy you. Let's get into it. So let's kick it off. So Josh, great to have you here, obviously. Do you want to start by just telling the audience a little bit about yourself?
Yeah, my name is Josh Lindsey. I'm the CEO and founder of American Business Brokers, as well as PHX Private Equity.
Very cool. All right. So we have a whole list of things, obviously, that we want to go into. But do you want to just kind of walk everyone through your background, your start, how you got to where you are today?
Yeah, 100%. So my background getting into mergers and acquisitions, it's a little bit different than most brokers. I actually took my first company public in 2006. It was a financial services firm. We did prepaid debit cards and ATMs. I was really a main sales guy. I was out on the road placing ATMs and whatnot into gas stations. We did a reverse merger. That gave me a little bit of capital. I really hated the public markets, super restrictive. So for entrepreneurs and sales guys like myself, as soon as we gave me a little bit of capital, and I hated the public markets because it's really restrictive. You have to get everything approved, et cetera. So when I came out of the public sector, I had a little bit of money. I started doing acquisitions myself, started buying and selling companies. So I bought and sold 6 of my own personal companies. And then out of that, the brokerage kind of spun out. I was getting friends and family asking me for help. Hey, can you do an appraisal? Or where are you finding the funding for this deal, et cetera? So the brokerage launched in 2011. We've sold over, 200 companies, a little over 400 million in aggregate value since then. But it acts as a great feeder for the private equity firm as well. So I see a lot of deals. If I like them or they fit my niche or investment style, I'm able to put capital in those. Otherwise, I'd focus on giving really high level representation to small business owners to help them execute a maximum exit value.
Super interesting. I think you have such an interesting business, like it's just not one that you see so often out there. There's like the rise of like bizbuysell.com where you can look at, and I feel like everyone who's coming out of business school right now is preaching, oh, you got to buy a small business, make money and then flip it. But, the reality is for a small business owner, this is a foreign world to them. They've been running their business. They've been improving their margins, maybe scaling, adding staff, services, whatever it is. When it comes to like an absolute sale and acquisition, this is completely new territory. This has to be like terribly daunting, not only from the know-how, and being in a new sphere, but even from, the ego, from your own personal identity that's tied to this business. I'm sure you deal with that a lot.
100%. I mean, look, small business owners are great at one thing. They're usually great at running their business. That's why they've been successful. That's why they have tenure in the space. But transitioning into kind of the open market to sell it, it's a whole new gamut. And I would say that's probably one of the largest mistakes these business owners make is they think, hey, look, because I've been great at running an HVAC company or a couple of dental practices, I can sell my own business. I'm a smart guy, but it's completely different. It's like saying you want to do surgery on yourself because you're really great at installing HVAC. We're specialists. I've been a specialist now since 2006. I got 20 years in this space and it evolves too. I mean, what I was seeing in 2006 is completely different than what I see in 2026. So a smart business owner is going to hire a professional for arguably the largest transaction they'll ever have in their life.
Wow, that's a good point, for arguably the largest transaction they've ever had. And I think it's also a really good analogy. Like, you wouldn't do surgery on yourself. Like, I had spine surgery a few years ago, and it's scary. And even my dad is an eye doctor, and he's a surgeon. And he's like, this is freaky. And I'm like, you don't tell me that. Like, hey. But I go to the surgeon and I say, what do you think? And he goes, you need surgery. And I say, is there any other way to fix this? And he goes, if you want to fix it, I can do it. If you don't want to go another route, you can go another route. And it's like, to me, this was freaky. To him, he does this 15 times a day. This is clockwork. And I imagine, again, you're coming in with I do this every day. I've done this 1,000 times. This may be freaky to you. And even the fact that you have this experience gives them a lot of confidence stepping into the new arena.
Yeah, I would say probably even a better analogy would be like, if you were charged with a crime, a serious crime that you didn't commit, you wouldn't represent yourself in court because your life or a very valuable piece of your life could be on the line. The same thing, a $5 or a $10 million exit for these people, that money's supposed to last them for a lifetime, or at least transition them into their next step. And so why you would do it on your own is beyond me, considering the stakes are so high.
Let me ask you another question. So you started off obviously this is a podcast where sales is welcome conversation. You started off, for this company selling ATMs to smaller businesses. Company goes well, goes public. You get, rewarded the whole bit. Did that experience in bringing ATMs to these smaller businesses help to kind of give you experience in working with them, seeing how they worked, and maybe put you on the track to where you are right now?
I wouldn't say that. I referenced that because very few people will go through an IPO in their life. That's a very unique process on itself. And I would argue that that's a more complex process than selling a small business. So what I'm trying to tell people is when I was 26 years old, I went through a reverse merger IPO. But what that stage in my life honed was really, really strong sales skills, because in order to sell a business, one of the components that you have to be good at is you have to know how to sell. If you're not great at sales, this is one of the most difficult and one of the most complex sales processes in the world, because there's no set format. And what I mean by that is, like, when you buy a house, you said you're buying a house. Yeah, congratulations, that's excellent. But the format's pretty straightforward. You make an offer, you fill out a rep sheet. There's, forms and stuff that you fill in. You have an agent that kind of guide you, but you look at the house, you kind of fall in love with it. Do I like the neighborhood, the schools, the size, the price, all that stuff? And then you make the decision. But you fit into a box where it's like rep sheet. You've got your dates of when you have to get your financing and appraisal and those contingencies in place. It goes to a bank. It has to appraise for the price. It doesn't appraise for the price, then they'll have to adjust it, etc. Then there's a title company, escrow, closing, really straightforward. On a business sale, there's no such thing. It's wide open. Every offer is different. Every contract's different. All the structures are different. Where the money comes is different. It doesn't fit into a box like real estate. And so what I'm referencing is part of being great at selling a business is that you better be really dynamic in sales, because every deal will be different and your sales process has to adjust accordingly.
Well, you're doing sales really in two capacities. I may be making an assumption, correct me if I'm wrong. You're selling to the business that is currently operating and to their owner who's looking to sell the business, and then you are actually selling the business to somebody else. So you kind of have like a double thing going on there.
Yeah, 100%. I got to convince the seller that I'm a trusted advisor. This is why they should use me and my services. That's the beginning. And then you have to take it to market and you have to present it correctly to buyers that this is a great investment. Here's why.
So you also mentioned this in our first conversation, was it's not the business that's selling that actually pays you, it's the business that's acquiring.
The reverse. Yeah, so M&A is a little bit different from real estate as well. Each party is responsible for their own fees. So the seller hires his own advisors and they've got to take care of their advisors' fees. A buyer, if they've got a CPA or they got their own broker or their lawyer, they have to take care of their fees. There is no shared compensation at closing.
They only pay if it goes through.
That's true for my firm, which again makes it a little unique as to what I do. There are brokerages out there that will require an upfront retainer. I would strongly advise somebody not to hire somebody who doesn't work on contingency. It's usually a tell sign that, they need a monthly paycheck to keep the lights on, so to speak. I'm confident enough in my abilities that if I decide to take on a listing, that I will make it contingency based only. Whether it takes me 3 months or 3 years to sell your business, depending on complexity, you're not paying me $1 unless I get it done.
So I think this is the next question I had here. You meet the business owner. They say, we're looking to sell, and I think you're the right guy to represent us and get this done. It's obviously a lot that they're offloading onto you. It's got to be very nice to have you in their corner because they can just do what they do and, let this whole process get figured out by the expert. Now, on your end, you're going and meeting with potential suitors, with potential folks to acquire the business. Sometimes I imagine there's nobody who's interested and maybe you need to shake some trees, or sometimes there are a lot of people and you got to separate, for who's real and who's fake, like who's actually interested versus who's kicking tires. Can you tell me a little bit more about that?
Yeah, I would say it's 70-30. 70% of the time, I really don't have an issue because I've appraised the business and I've kind of screened it prior to taking it on. And so when I take it to market, I'm relatively confident that we're going to get a lot of traction. Okay. And so that happens 70% of the time. The buyers come, everything just kind of goes around the process. 30% of the time, I'll like the business. I'll see intrinsic value. But like you said, I'll take it to market and it's not getting the traction that I assumed. And so it requires a more aggressive prospecting effort on my part to actually bring buyers to the table. For example, I'll give you a really good example. I'm representing a dairy business, a dairy farm business currently that's under contract. It's arguably one of the most complicated businesses I've ever sold. One, not a lot of people want to get into the dairy game. Like that's kind of a unique space, right? It's just not a normal business. Two, yeah, I mean, because they work with cows and agriculture and all this stuff. It's just unique.
And spoiled milk doesn't smell good. Like,
It's not attractive to a bunch of buyers out there. So one, and then two, agriculture, like we talked about, is a commodity. So getting financing for that business, even if you find somebody that's interested, really, really difficult to qualify because of the application process, and they're going to scrutinize it. So that one's been more difficult than usual, even though the financials are clean, the business is good. It's been around for almost 50 years. I've had to work a lot harder than normal to go out, find the right buyer, and then basically talk to the banks and sell them on why this is a solid investment, during that process. So that doesn't, like I said, that's the 30%. Those are the difficult deals that require more than just sitting back and kind of taking buyer phone calls.
gotcha. Well, also, I imagine not everybody knows how to operate in the day. Like, it's not like, a dry cleaner where they're fucking dime a dozen out there. Like, this is a unique business in a unique industry.
Yeah, so 30% of the time, it just requires an aggressive broker that goes out and you got to pitch, you got to sell this business in order to get those deals done.
How do you find the clients to represent? Like, how are you sourcing those people?
The majority of my stuff comes from referral. When you do an excellent job for a seller and they're very satisfied with the price, the structure, and your representation, they typically tell people, and I'll get phone calls 6 times a year. Hey, you sold so-and-so's business. Can you help me, etc. Most of the time it comes from that. But I do have marketing agencies that I've hired. They'll prospect, they'll go out and find deals for me. I'd say 1 out of 10 of those deals ends up being good. Most of the time you're just kind of sifting through stuff that I'm probably not interested in, but you kind of have to do a combination of all things to just keep the pipeline full.
Yeah. Well, do you do anything to solicit more referrals your way, or does it just kind of happen naturally?
But yeah, I mean, I incentivize people. So if somebody brings me a referral, I pay them 1% of the deal. So like, for example, one of my referral partners last year, I paid $65,000. All he did was connect me on one deal and he got paid 65 grand when it closed.
Not bad.
Yeah, I mean, it's pretty easy. And again, he's comfortable with me. I've known him now for 5 years. So, but yeah, I do incentivize people that, look, if you bring me a deal and it ends up closing, I'll definitely compensate you.
So that's probably even still less than your cost per acquisition with a marketing company.
100%. Well, they actually get paid more. It's not less. Like, I would say that, but referrals are better. I mean, they're a better type of lead than a cold lead. So I'm willing to pay, $65,000 on that deal because it's a higher quality lead.
Yeah. Well, I'm even thinking, the percentage of, you're paying a marketing company X amount and 1 out of 10 deals is viable. Well, that's, you're paying them for a full year, essentially for that one deal, as opposed to even, I don't know, even your time. Yeah. And even if it's a referral, a friend of a friend, like it's just an easier, warmer introduction than like, this is cold and I hope that you'll like me kind of.
Look, and I believe people deserve to be incentivized. I mean, there's no reason not to incentivize people. There's enough money to go around from everybody, and I have no problem cutting people in on the deal.
So when you're selling the business to, okay, you get in, they shake hands and say, we want to work with you. We want you to sell our business. Now you're going and you're looking at the folks who are inspecting the business. Is there, aside from the tire kickers versus like the real interest people, what is it that you're looking for? Like what makes one person like a more, maybe it's an exciting entity, an easier entity to work with, natural fit? Is it someone who's looking to take it and just run with it? Is it someone who's looking to take it, higher margin and reflip it? Like, can you tell me a little more about that?
First out of the gate, and this is where I spend a lot of my time, is pre-qualifying the buyers. Like you said, separating the curious from the serious. So everybody's got to sign what's called a non-disclosure, non-circumvent form, meaning they're not allowed to share any info with any third parties without our consent. And they can't contact vendors, employees, etc. If they do that, we've got $1 million damage clause. We take it pretty serious. Confidentiality in these deals is really important, and especially to sellers. They don't want their business being shopped around out there. So they've got to be willing to sign that. Any buyer who's not willing to sign one of those things, I don't give the time of day. But the second thing, and this is kind of a further qualifier that I require that most brokers don't, I require, some type of proof of funds to set the expectation. The reason being is I can't help people on a $5 million acquisition if they've got $25,000 in the bank. There's nothing I can do. Like, they won't qualify for any type of funding that I bring to them because their risk profile will be too high for any lender that I can present. So the buyer's got to sign it on disclosure, provide some proof of funds, show me that they're qualified in some aspect. That's the first gate that they've got to get through before I'll release any info on the business.
Wow, there's just so much qualifying and pre-qualifying, because otherwise you got to be wasting a ton of time.
We'll waste a ton of time.
So, I mean, without a broker, most businesses never sell. Do you think that's part of the reason why?
That's a good question. I can't pinpoint exactly why they don't sell, but I would say it's probably a combination of a few things. One, they're not getting any advice on how to prepare it correctly. Their financials are going to be a certain way. No one's giving them feedback. They're just throwing kind of mud against the wall and hoping it sticks. That's going to be a big issue. The second part, and this is where people I think make the biggest mistake, is they believe they've got a good business and they can just take it to any bank or any institution and it'll just underwrite. People don't understand that every bank has a different risk profile. Like, for example, Wells Fargo is a very large SBA lender that they hate restaurants. They don't like restaurant deals. So if you're selling like a world-renowned Mexican restaurant, I personally wouldn't be taking it to Wells Fargo. I'd be taking it to other lending institutions that I know love that space and will do deals in that space. But again, a seller, they're going to have no knowledge of that space. They're going to go, oh yeah, I bank at Wells Fargo. They like me. Let's take it down there. They'll spend 60 days and then Wells Fargo will say, yeah, we can't do this deal. And then what do? They have no idea where to take it or how to get it done. And that's where they bank. Think about it. Where they hold all their money, that bank knows them, but the risk profile up kind of the ladder and the chain is like, yeah, we don't do restaurants.
Can I tell you, I never would have thought about that. Again, like I'm comparing this to buying a house, and it's like it's kind of a cookie cutter, like, kind of deal across the board. Whereas in this, there are just an impossible amount of variables.
There's a lot of variables. It's just different.
Interesting. Are there types of businesses that you prefer to work with, like maybe that you know better than others, or a small business is small business?
They're relatively all the same. Like, I've sold everything from medical device companies to logistics companies. I just told you about a dairy farm that I'm representing. They tend to kind of fit the same profile of what needs to be done and how it needs to be represented in order to sell it. However, I have sold a lot in certain spaces because I get a lot of referrals out of a certain space. So I think I've probably done 57 trucking companies in the last 15 years. That's just because you sell one trucking company, 2 or 3 are going to call you within the next 12 months. So I have spent a lot of time in that space. I know how to package them and how to get deals on them, et cetera. But putting deals together is that's the skill set that you need to have. So I have done it kind of in a full gamut of things.
Could you tell me more about that? Like, in terms of packaging the deal? Like, you mentioned that a couple of times, that it needs to really be packaged the right way to be sold. What does that look like?
Yeah, that's a great question. So it comes in 2 formats. One, you're packaging the financials and the pitch deck to a buyer, right? If you just send them over a bunch of messy financials that's not clear and easy to read, and someone can't get to the bottom of, this is how much money I make, this is what it looks like, etc. If a buyer can't easily identify that this is a good deal and why, you're just going to lose a ton of buyers, and probably qualified buyers that can do the deal. There's your first packaging. It's got to be a nice tight pitch deck so they can see it, believe it, and move to the next step of making an offer. The second part of packaging, though, and this is probably the most critical, you got a buyer, you got an offer in place, and now you need to take it to the right bank, right? So I just told you, you don't take restaurant deals to Wells Fargo, you got to take them to other places. That's part of the pitch as well. If that pitch to the financial institution isn't tight and the banker can't understand it in the format that they like, then it won't get underwritten and it won't get a loan. Getting a loan for a business is twofold. One, they're going to check the financial capability and risk analysis of a buyer. Okay. They're going to underwrite them and their risk. But the second part is the business. If that business pitch and package is not tight, they could not like the business, but love the buyer. Do you get what I'm saying? The both have to meet in order for that size of a loan to get underwritten.
Wow. And I'm thinking again, like if I'm running a trucking company, for example, even just that first step of like really having the full understanding of my financials as opposed to like a, finger in the wind. I know what I can spend and I know what I can take home, and putting together that deck and writing it out the right way. It's a completely foreign skill set from what you've been doing your entire career, even if you run this thing incredibly well. So you really are just a salesman through and through on both sides of the board here.
And a specialist. I mean, I've spent 2 decades of my life really understanding the process of M&A. And again, you have to continually update your skills. 2006 market is a way different market than it is in 2026. If you're not staying current with what banks like to see and what buyers want to see, you're going to close less deals. You can't keep doing the same stuff you were doing 5-10 years ago.
We have a note here. Like I just on one of these questions. What made you want to go into this as opposed to staying in the corporate world? Like, what was the kicker? What was the pusher?
Well, twofold. One, like I said up front, the brokerage acts as a great deal feeder for my private equity firm where we invest in companies. What I learned about private equity is you're going to look at 100 deals and you're going to like one, right? And so you're going to be in the process of reviewing a ton of stuff, and you're not going to get into a deal until you review 100 of these things. So it's a slow game, and you got to be patient. You got to stick to your metrics, and you got to, stick to your investment profile and not pull the trigger emotionally. Like, I got to get into the deal, and you just pull the trigger. So you're waiting a lot. So the brokerage aspect acts as a feeder, and I'm seeing deals all the time. And if I like them, I can get involved. But on the flip side, I can provide high quality representation with my background to small business owners like an investment banker can, and give them really good representation. But then I'm also making fees on the other side. So the two companies really work well together.
Can I tell you, I'll be completely honest, I completely forgot that you ran a private equity firm. So is the PE firm, are they mostly investing in small businesses as well?
Yeah, those deals are usually 10 million and below.
Wow, the brokerage is really like a great weapon for you. And not only as a business itself, but like you said, a feeder to the PE fund.
Yeah, because you have to be patient. Like I said, you've got metrics, investment metrics that you need to stick to in order to make great investments. And so the minute you start to deviate from that, you'll make bad investments. But again, it's hard to be patient, right? When you're just sitting on the sidelines waiting for the next deal. So the brokerage just acts. I mean, I'm selling anywhere between like 20 and 30 million in small businesses on the brokerage side. And I might not do a deal in private equity for 2 years. But see, I've got $60 million in revenue pumping through the brokerage. And then all of a sudden I'll find that one deal that I really like and I can take advantage of it.
Very, very interesting. So I started my company because I've been in sales my whole career. I've been running teams, building teams, coaching sellers. And I noticed that after COVID, there was a big trend, especially with startups, where they would hire salespeople and say, go have at it. And 6 months in, none of them get it. And these companies have spent a ton of money on these salespeople and a ton of time. And it's just, you're burning capital, you're burning market share, like all these terrible things are happening. So I started my company literally as we're going to coach. Companies will hire us to listen to sales calls. And like for us to up a salesperson or a team's closing percentage by 25% is easy. Like it's absolutely easy. And in time, what happens is as we grew, we realized, well, if their compensation structure is off, we're really limited in how productive we can make them. And if reporting is off, like these are way bigger levers that we can pull to make this team really hum and run efficiently. And I had a really interesting conversation with my brother about this, who's in finance. And what we do is we go to a company, they hire us to make their sales team more efficient. And one of our plays is we work with PE firms, and we are a wash, rinse, repeat, where they buy a company, they put us on, and we get that team in ship shape. So they're not just spending on the sales team. It's, it's not like turning on the faucet with the drain open. You're getting all the efficiency out of it. But he said to me, he's like, why don't you, Max, you could go into the world of the biz, buy, sell, buy a company, get them, really productive and selling and whatnot, and then flip it. So I feel like I'm just kind of realizing like this big convergence of worlds, not only two people who have gone through IPOs, had back surgery, and are in sales, but like this kind of whole other wild world of that. So I feel like it's almost like a back angle of how you ended up.
Similar, yeah.
Wow. Very cool. So can I ask another question? When it comes to scaling the brokerage, is there any interest there, like in bringing on more heads to be doing what you're doing?
I've tried it a couple of times, and what happens is there's a few issues in the brokerage world that have been difficult for me to overcome. I'm sure I could overcome it if I wanted to dump a bunch of money into it. But one, most people can't go a significant amount of time without making money, right? And I would say the soonest someone's going to get paid is like 90 days. They come in with a lead, put it under contract. Yeah, it's going to take like 90 days to close the deal, and then they'll finally get paid, so to speak. But if they have to start from scratch, I mean, it could be 6 months to a year before they ever realize their first paycheck. That's really hard for some people to do. I don't have that issue, but for most people, it's like, yeah, I could probably go a month or two, but then somebody's going to have to subsidize, which means I would have to like put them on a payroll and subsidize them. And I just, I hate doing that. And the second thing, and I've had a few people that have come on where I've been training them, or I've, brought them on kind of as an intern, so to speak, to try to teach them the business. I'm involved in the initial discussions with these guys to help lock down the listing. And then I'll pass it off to the associate. And then usually within 30 days, that seller, that business owner is calling me and they're like, look, we really like Jeffrey. Like, he's nice, but you're the guy. Like, you're the guy with all the credibility. You're the guy who closed all these transactions. Like, we really need you to be involved in this sale. And so it's like, if I have to do everything and split a commission with Jeffrey, like, why don't I just do it all myself?
All of that makes sense. I mean, also, like, listen, I literally make a living off of this, where you can't just hire a salesperson and then say, go shadow this guy for 6 months and you'll figure it out. They don't. Like, there's a whole different angle to like teaching it, getting the confidence. And I think in your industry, probably more than anything, is it's so complicated. There's so many variables, like we're saying, that so for someone to be like, charming, personable, persistent, yeah, you can find that. But like to actually be able to educate them on this whole process to the point where they feel like they know more than the bankers, they know more than the people that they're representing, that's probably a lift and a half. Like, that also makes sense. It's hard to subsidize. Like, listen, if I know that you're going to be profitable, I can subsidize you for a while, and maybe after you're hitting a certain amount, I pull that away. But if I have no idea that in 6 months you're going to stick and you're going to be here and you're going to be profitable and we're not splitting deals forever, then I can't subsidize you. It makes no sense.
I mean, it is and it isn't, right? I'm like 20 years into this. I don't need to build a big brokerage. I don't want to be that busy, to be frank.
I was going to say, are you like at a point in your career where like, this is good enough?
I wouldn't even say good enough. It's just like, I'm at a point in my life where quality of time is more valuable for me than money. I have money. I have passive income. I own 4 other companies that are kicking off dividends, and I'm still closing deals. Like, I'm in the 7-figure range every year for annual earnings. So, but I probably work, 20 hours a week. So I have time to go to all my kids' games. I can travel when I want. I play golf twice a week. Like, this is where I want to be in my 40s. These are the things I want to be doing. If I start hiring 12 other brokers that I have to manage and, oversee all their deals just due to liability that I'm the officer of the company, I'm going to be working like 40 to 50 hours a week. And I'm just, for what? Is it for ego? Because it's not for money. I'm making plenty of money. I'm just at a stage right now where I want to focus on quality of life, and I like to do the stuff that I like to do.
That's fantastic, man. I feel like that's where everyone's trying to get to. This has been so interesting. This has been a really, really eye-opening conversation. And what a cool business model you have between the brokerage, the private equity fund, and then you said there were 4 other companies that you own?
Through private equity, I've acquired equity stakes in 4 businesses. So like I said, I've got equity stakes ranging from 30 all the way up to 70% controlling stakes in these other companies. I typically will serve as like a board advisor, usually from the legal and the financial aspect. I only buy companies with good infrastructure, right? Where they've got management and things. And really, that's what you're supposed to do. My job is to empower the management to help them grow, implement strategy, but really just be hands off and let them thrive. And then that's what I do. And those are really set up for like 5 to 10 year exits, right? They're not short-term flips, so to speak. They're all staged for about the next 10 years. I'll exit on all of those somewhere in my 50s and then kind of transition to the next chapter.
Wow. And what kind of company? I know you said small businesses.
Yeah, we've got a construction services business. We've got a medical device business. We've got an Airbnb real estate arm where we own a bunch of properties that we're renting out. So yeah, just a number of things.
Good for you. Diversified portfolio. You got your own mechanism to bring in clients that also brings in revenue. And dude, the balance is everything. Like in the beginning of my career, I made a lot of stupid moves because what's the highest paycheck that I could get? And maybe there's a point in your career for that. But then, I was talking to another person on this podcast and they were saying, I don't care if I make, for example, less money as a business owner, at least I own the business and I get to do what I want. And I thought that was a really interesting point too.
Well, the ultimate goal is freedom, Max. I think as your career continues to ascend and you make more money, you'll realize that you'll be more interested in maintaining your freedom than you are in making another $1 million a year. There's a threshold for everybody. Have you ever read The Psychology of Money?
I have.
It's an excellent book. There's a chapter in there about a guy who was worth $100 million and he was determined to be a billionaire. And he just went all in and he went crazy and just risked it all because he just had to be a billionaire. And he ended up getting into the gray area, committing a few crimes, ended up losing it all in the pursuit to become a billionaire. And it was he was already in a very rare exclusive club being worth more than $100 million. And yet this insatiable ego and desire was well, I have to be a billionaire. And that chapter is really interesting in the sense that you have to identify, what is enough for you, but more importantly, are you living, I don't want to say balance because I don't believe entrepreneurs are very well balanced. In order to be successful, you kind of have to be all in certain sectors. But I do think that there's a time that you should be all in. You should maximize production and profit. And then once you reach a certain threshold and you go, you know what, I need to reintroduce more family time, more travel, more availability to play golf, whatever the things that you like to do. You've made smart decisions with the money that you've made while you were all in. And now you've created some passive opportunities that are supplying that so you can pull off the gas, so to speak, over here. And it's making up the difference. But again, quality of life is really important. I mean, none of us are guaranteed to live till we're 90 years old. I don't even know if I want to live till I'm 90 years old. You know what I mean? So what are you living your life? And I emphasize the word live. Do you do the things that you want to do on a daily, weekly, and monthly basis? And if the answer is no, then you got to work super, super hard to get to a place where that answer could be yes.
That's something I think that I've learned in maybe the past 3 years, and I think it comes salesperson, entrepreneur, a similar mentality where if you're good in your home life, you're better in your job. And if you're better in your job, you're better in your home life. And I think that salespeople and entrepreneurs, it's the same thing where so much of your feeling of self-worth comes from what you've closed in a given year or how much you've made or a goal. And, let's say I'm a salesperson and I've had a crappy year. This has happened to me. And well, okay, what else is going on? Well, I play 3 different instruments. Well, I also play ice hockey. I've got a wonderful marriage. I've got wonderful kids. And when I'm so hung up on that number, it's well, I don't give a shit about that. This is all that matters. And that's a shame because you really do have these other good things happening. And then when I go to talk to a prospect about something, I'm so fucking weird because there's so much pressure put on this one piece of everything that it makes me, bizarre. It makes me really strained and tight and commission breathy and all those things. And for me, I put so much pressure on myself. I'm a big therapy guy. I love therapy. The biggest thing that my therapist said, which was counter to everything I heard in my life, was you're launching into this. Awesome. Make sure you go for a run every day. Make sure you don't stop playing the piano. Make sure that almost you don't work too hard. And that's not exactly what it is, but that you are balanced in the other areas. Otherwise, you're going to get kind of warped. And then, the age-old question, are you happy? Which is, an unbelievably complicated question. You're going to have a very easy answer, which is no. And that's no bueno.
Yeah, I mean, when I was in my 20s, I was doing everything I possibly could to make money and be successful. I would say 10 years ago, I just made a hard rule where I don't start work until 9 a.m. Meaning it's very important to me that I go to the gym, that I get exercise every day. I have these outlets, this regimen that I like to do in the morning. Occasionally, I'll take a call or do something that's really, really critical or important if I can't reschedule it. But I'm talking 98% of the time, I'm not doing anything. I'm not reading emails until 9. That's my choice because I've got to do the things that I want to do so that I can focus on the things that I need to do. You know what I mean? Like I'm not willing to sacrifice my wants anymore.
So I made a rule. 4:30, I stop working because that's when I pick my kids up from school. I know that during the day when it's 8:30 to 4:30, when I'm working and I'm locked in, and I'd argue, I don't know anybody who can get more done in that hash mark than I do. But come 4:30, that's it. It's time for my kids. And I found if I push that, I get annoyed at my kids for distracting me from work, and I get annoyed at work for distracting me from my kids. And then what's the point of all this? Like, what are you doing to yourself?
I'm fortunate enough to live in a pretty affluent area. And when I say affluent, I'm saying like I live next to, there's billionaires around me. Like Mitt Romney, if you remember that guy that ran for president, he lives like a block from me. The Huntsmans live around me. They're on the billionaire list. The Sorensons, these guys are big. And because I've grown up in this area, I've had access to these guys since I was a kid. And I've asked them before, what kind of advice can you give me for business, for life? Like if you could tell me one thing, what would it be? And I've had 2 of them tell me the exact same answer. And that was spend as much time as you can with your kids. And I was like, what do you need? And they were like, well, look, you're already ambitious enough. You're smart. You're hungry. You're going to be successful. There's always going to be another deal. You'll always be able to find a way to make money because it's in you. We can see it. But when you get my age, you'll want to go back and have that time with those kids. Those 18 years before they leave the house, they said, Josh, it goes by so fast. And there's no amount of money that you can make could buy that back because once it's gone, it's gone. And this is coming from guys that are worth between $800 million and $3-4 billion. And they didn't give me some crazy advice on investing or for a tax strategy or, an asset plan on how to protect wealth. It was, you better pay attention to those 18 years because when you are worth $100 or $200 million, you'd probably trade most of it to go back and do it again. So it's good that you stop at 4:30 because I don't think you'll regret that in 10 years. You'll miss those days when your kids are young and you'll be grateful that you were mindful enough to spend that time and be present with them because nothing will have such value.
Well, not already now. I'm thinking like if you do this and you over index, it's like, well, now not only have you missed your kids grown up, but you're totally burned out. Like you hate looking at your logo every day.
Yeah, or you could end up that way, right? You could end up that way. That logo could be a reminder of everything that you sacrificed, which was most important for this stupid logo that, no offense, no one will probably remember in 20 or 30 years.
Dude, very interesting and really, really good advice. I agree with you. And I hope you almost have to trust yourself, right? That you are smart and ambitious and have the wherewithal, like you'll make it work. I think sometimes that over pressing on the gas comes from insecurity.
That was talking about high achievers and how high achievers always feel like they're behind. Like that really resonates with me. I really don't feel like I'm that successful of a person because I always feel like I missed out on this opportunity or I could have done better here. If I could go back, I would have done X, Y, and Z and look how much further ahead I would be. There is this relentless uncertainty that you just don't feel like you're ever good enough, but it makes you normal. When you get in a room with other entrepreneurs, you'll realize that you're not the only one that feels that way. And it's kind of a blessing and it's kind of a curse that we're always just on edge thinking we're not doing enough, but it's also what drives us forward and helps us succeed at such a high level.
I feel exactly the same. I think it's a total brain thing where I hate to lose more than I like to win. If I win a deal, great. I was expecting to, and that's how it should be. If I lose a deal, I abuse myself. Like, what's wrong with you? How did you miss that, blind spot? And I think it's one of those things that's going to make me successful and it's going to make me miserable, simultaneously. So you kind of have to throttle that because the other areas in your life are pretty consistent.
We, as a family, we have a chalkboard. When we built my house, we built this giant chalkboard in the back, like where the mudroom is. And there's a big title on it. It just says gratitude wall. Every Sunday, we sit as a family and the family is required to think about the past week and then share something that they're grateful for. And it's really amazing because obviously I've got deals and my wife has certain things that are happening, but it's been remarkable to watch my kids. We started doing it when they were like 4 years old and now the youngest are 12. So it's up good at 8 years. They're extremely articulate in how to express gratitude and they're doing it on a weekly basis. And we write it down and everybody shares But I think that's a really important component in our own lives as entrepreneurs, because we're so hard on ourselves on the deals that we miss. Are we taking an opportunity to reflect on like what we're grateful for? Because even when you miss out on a deal, there's likely something in that week that you can be grateful for. A new phone call, a new business relationship, a new contract that got revised, like whatever it is, we can always find a way to be grateful. And I mean, I'm a big Tony Robbins fan, but he really says that's one of the largest secrets to success is practicing gratitude as much as often.
Oh my God, I'm stealing that from you. Like, I'm not even asking if I can. I'm literally, as you're saying this, I'm picturing this new house and I'm thinking, what wall do we do this with? Because I think not only is that helpful for an entrepreneur where, again, so much of your feelings about yourself are cooked up in, the business that you're running. You lost a deal, but maybe you went for you played a great game of golf and you had a wonderful time with a friend. Like it's one of these things again, like I think I've learned in more recent years, but they also, going along with Tony Robbins thing, or you read from these folks, how gratitude as a practice is something that from a young age is so impactful. And I think, you're starting it with your kids young, that'll affect how they feel about themselves and their lives when they're going through like fucking middle school, for example, which is the worst, and I'm thinking like, if my wife and I did that every week, it would be helpful to us as people. It would be helpful within our marriage. Even my daughter, who's 3 years old, she doesn't even totally know what it means. But if she wrote, I'm grateful for, the mango slices or Cinderella.
What was so crazy is when they were little, like that's what they would say, right? And you giggle, but they'd be like, oh, I'm really thankful for, these mangoes. And they're like, it's silly. But it doesn't matter. It's the practice of gratitude, because when they say silly things that they're for and you acknowledge them, you thank them for that, and then you write it on a board. By the time they're 8, they're grateful for a new friendship at school. And by the time they're 12, they're grateful for their grandma being in their life because they make them feel special dude, they get really good at articulating gratitude over time. It starts out silly, it progresses, and then all of a sudden by the time they're 12, they sound like an adult expressing gratitude. Like they're really good at it, but it's through the reps, right? 52 weeks a year times 8 years, they've now done it 300-400 times. They're good at it.
Is there a reason you do it on Sundays? And is there a time of day it's done specifically?
Lowest day of the week for us. I'm not working. I rarely do hardly any work on Sunday. It's usually a family day. We hang out, we have a meal. We usually typically do it somewhere between like 5 and 7 o'clock. So before bedtime, before maybe the 5:30, 6:30 NFL game that comes on, we're big sports guys over here. We just do it in that window that we're not interrupting anyone's like Sunday activities. And it really only takes like 10 or 15 minutes, man. It's not that big of a burden.
Maybe it'd help with like the Sunday scaries.
Sunday scary. I mean, you got the Sunday scaries. Yeah.
I actually haven't had them in a bit. Fortunately, it's made me think I'm onto the right thing in what I'm doing in life. But I remember as a kid getting those like, oh my God, there's an assignment that I didn't do, or, oh, there's that test. This like growing up is tough. And I feel like maybe if you do that, and then throughout the week, it's helping you to keep your eye on the good stuff and not get caught in the undertow.
Yeah. And I mean, I'll share one last example. Like my son had a girlfriend for like a year, and it was his first girlfriend from his freshman to sophomore year. They ended up breaking up, and he was having like a really hard time, right? You remember that first breakup, those new emotions. You're like, oh, I thought we were going to get married. They're like devastated, etc. That one Sunday, everyone kind of knew that he was having a hard time, and each one of us expressed something that we're grateful for my son. And you could tell that it was very moving for him because he knew he had these 4 people that were in his life. And each one of us were like, I'm grateful for Crew because he does X, Y, and Z. And then it can be a complete shift of mood where it's like, oh, I'm not alone. Even though this one person kind of dealt me a form of rejection and breaking up with me, like we rallied behind him and he kind of turned the corner and kind of pulled out of that.
That's so awesome. All right. And is it one thing per person?
Yeah, we always share one, just one. What's funny is we've started to do, if you're at our house, when it's time to do the gratitude wall, you have to share with us too.
Oh, I love that.
So sometimes my parents will be there and they'll be like, you have to write on the gratitude wall. And they're like, what? And we're like, yeah, we do this every Sunday. You're here, so you have to do it too. My brother was here last week. He'd never done it. You could tell he was like all uncomfortable. But then he watches my kids do it. He's like, whoa, they're like way good at it. I better kind of lean into this and add something because they're good at it. But yeah, if you're at our house, you're required to put something on the wall.
All right, Josh, thank you so much. This is I'm grateful for that piece of advice. I'm grateful we talked today. And I hope one day I'm at your house on a Sunday and I get to write on the gratitude wall.
All right, that sounds good.
And that's a wrap for this episode of Closing Conversations. Huge thanks to Joshua Lindsey for joining me. The big takeaway, the goal is not just more, the goal is freedom. More money, more deals, more growth, that can all be great. But at some point, you have to know what you're actually building toward. Josh's reminder was simple. There will always be another deal. You don't get the time back. If you liked this episode, subscribe, leave a review, or share with someone building a business and try to keep their priorities straight. And if you're building a sales team that needs stronger systems, better coaching, and more consistent execution, head over to www.commissionsales.com. We will see you next time. And until then, let's get closing. Thanks for watching. If you enjoyed this conversation, make sure to like, share, and subscribe. And don't forget, you can always catch us on Spotify and Apple Podcasts for more episodes of Closing Conversations.